everyone. Today we are going to discuss about marginal propensity to consume and its relationship with investment multiplier. So investment multiplier is a very important concept in CA Intermediate Economics for Finance Chapter 2 Keynesian Theory, Chapter 1 Keynesian Theory, which Unit 2. Now what is investment multiplier? See, the investment multiplier tells us that by how much will the income, so investment multiplier which is denoted by K, it tells us what? By how much the income, that is Y, will increase if the autonomous investment increases by 1 unit of a rupee. It means if suppose the value of K is 5 and if the autonomous investment, that is I, increases by rupees 1, then the income will increase by rupees 5. So if income will increase 5 times compared to increase in the autonomous investment. Now before we go any further, an important announcement: Excel with Yashash, it's a CA Intermediate Group 1 comprehensive batch for English May 2023 attempt and started on 18th of August. The schedules as such you can see here. From 18th of August we'll have tax by Vijay Raya sir. Then you have law later on in October by Kartik Iyer sir. Then again in August you will have accounts and accounting standards. September you will have cost and management accounting, and again in October you will have accounts. So India's best educators, the educators who are associated with the Yashas Academy, will come down on an academy platform to take these classes. You have 600 hours of live interactive sessions. You have revision and practice sessions, structured courses and PDFs, and unlimited record classes that you can watch a number of times. So Mayur Nahata sir will be taking accounts, has got over 10,000 students he has taught over, and see Vijay Raya sir has taught over more than 40,000 students will be taking corporate law with you. Ravi Kant sir will be taking accounting standards largely. He has taught over 20,000 students. Dhananjay sir has also trained over 10,000 students over last 9 years. Kartik Iyer has over 20 years of experience, and Rajvanan sir has over experience of 6 years, and he's also trained a lot of students. The batch, the flow of the batch, August the batch starts, 60% of the syllabus will be completed by the end of September, and in October the entire will be over, and then in November you'll have MTP, RTP, and other quiz and test. Alright. As far as plus features is concerned, you see you'll have interactive classes, structured courses, live tests, open houses, digital notes will be available. You'll become part of the Unacademy community and unlimited access. Iconic benefits will include all the benefits of plus feature. Additionally, you'll have one-to-one live mentorship, and you'll receive printed materials and doubt solving session. A very important announcement as well to you. You see, we have started with CA Foundation and CA Intermediate combo offer. If you can see here that if you would take a 24 months course, the price would have been 44,900, and after the price hike it becomes 49,500. But now if you take the subscription between 29th and 31st of August, you will be getting you have to pay 35,920, that is 13,580, that is 27% discount. Likewise, for 18 months you'll be saving 12,580. For 12 months you'll be saving 10,980. For accounting 24 months, you see you would have taken, initially it was 71,900. After the price hike it will become 79,500. But if you take the subscription from 29th to 31st of August, then it is available at 57,520, that is a discount of 21,980. Like for 18 months you'll be saving 20,580, and for 12 months you'll be saving 16,080. Please do not forget to use the code YESHAS, YESHAS. to avail this discount. Now coming back to the topic. All right. So how to determine the value of this K? So we say that the value of investment multiplier, how do you find? We say change in income, change in income by change in investment. Correct? Change in investment. Now this value can also be determined. Let's say for example, income Y0 was rupees 10,000. Right? When investment was, let's say, 1 lakh rupees. Income increases to, let's say, 80,000 rupees. When investment increases from 1 lakh to 1 lakh 20,000. Now what is the change in investment? Change in investment is 20,000 delta I. What is the change in income? Delta Y. Delta Y is how much? Delta Y is 70,000. Alright. So it means the value of K is delta Y by delta I, that is 70,000 by how much here? 20,000. So it means how much you'll get is 3.5. It means if the investment increases by 1 rupee, the total investment will increase by 3.5 times. Now this value can also be determined using marginal propensity to consume, MPC. Now what is marginal propensity to consume? MPC. MPC is calculated as change in consumption delta C by change in income. Right? And in consumption function, you have C equals to A plus BY value. This B value is your marginal propensity to consume. So how we can use this formula for this MPC to find out the value of K? Simply we say that K is 1 by 1 minus MPC. It means if the value of MPC is 0.8, then if I want to find out the value of K, then it will be 1 minus 0.8. That will be 1 by 0.2, that will be 5 times. And if the value of MPC is 0.2, then it will be 1 by 1 minus 0.2, that will be 1 by 0.8. You will get how many times? 1.25 times. So here, when the MPC was 0.8, you got the investment multiplier value as 5. And when here MPC is 0.8, 0.2 lower, you're getting the value of investment multiplier is 1.25. It means there is an inverse relation, that there is a direct relation between MPC and investment multiplier. It means higher the value of MPC, more will be the value of investment multiplier, and vice versa. Alright. I hope this helps to you. I'll come up with another snippet with regard to another topic very soon. Till then, let's crack it.